How's it going, everyone? Matt Diamond with Kalshi, and today we're going to talk about using Bollinger Bands to trade event contracts on the NASDAQ 100 daily close. Now, similar to trading, it's all about having a plan and trying to use maybe some indicators to get an edge as to what could possibly happen. So on my chart to the left here, this is the daily chart of the NASDAQ, and these squiggly lines are the Bollinger Bands. And just one thing that I take away from looking at this chart is that every time there is a big push into the upper end of the Bollinger Band, it has some sort of pullback. Nice push up into it, pulls back a little bit, still hanging around the middle portion of the Bollinger Band, has a nice push higher, and then it pulls back and rinse and repeat. Every single extension to the upside that's trading towards the higher end of the Bollinger Band gets met with some form of pullback. Now, nothing ever works 100% of the time when it comes to the stock market, but just having this indicator on a chart, you can see that it seems to be pretty consistent. Every push into the upper end of that Bollinger Band does pull back a little bit, which may not seem like anything crazy, but that's where edge can be found. And one thing that I've noticed is it works really well at the extremes. So when it's trading right at that Bollinger Band line towards the upper portion, that's where some big pullbacks can happen. And even though today it wasn't necessarily trading at the high end, there was some opportunity, so I want to go into the contracts just to highlight those. So the NASDAQ 100 opened up right around 15,900, under that 16,000, towards kind of the higher end of the Bollinger Band. Not an extreme push higher, but it is towards that upper section. So let's go look at those contracts to see how we could have formulated a trade. So here's how I see it. Pushing up into that 15,900, knowing that it's trading close to that upper Bollinger Band. A lot of times there can be pullbacks when it's trading at those extremes. Let's just look at the contracts that we're trading today. So right around that 16,000, that was above where it opened up, that 15,900. 15,800 to 900, and then this just periodically goes down. And this is what I'm thinking. If it opens up towards the extreme end of that Bollinger Band, how could possibly put together a trade? Thinking that if there is some sort of pullback, then I would think purchasing yes shares for a possible pullback could be where the play is at. It's obviously hard to know exactly where it's going to close, but just realizing that when it opens up into that higher end of the range, it could possibly pull back just because of the historical data that we've used looking at the daily chart with the Bollinger Bands. So that was a really good example on the NASDAQ 100, and the same thing can be applied to the S&P 500. Looking at this Bollinger Band, every time it pushes towards the higher end of the range, it usually pulls back. So the same thesis could be applied here, where if it's opening up towards that higher end of the range, buying yes shares on those ranges that are lower than where it opens because there is a probability of a pullback, those could pay out. Now remember, nothing works 100% of the time, but we're just playing probabilities and we're using Bollinger Bands to better our outcome. And the same thing can be applied on the opposite side of the situation and the trade. So using the NASDAQ 100 again, we were talking about it trading towards the upper end of the Bollinger Band and it possibly pulling back, and then buying yes contracts on some of those ranges that are lower than where it opened up, they could possibly pay out. What about when it opens towards the lower end of the Bollinger Band? So let's look at some examples. Opens up towards the lower end of the Bollinger Band. There's another example towards these lower ranges. And when it opens up towards those lower ranges, maybe thinking that those days it could get some sort of bounce. So trading and buying shares of the yes contracts that are at a higher range than where it opens up because of a possible bounce, using those Bollinger Bands as a historical guide. Now, nothing works 100%, but there's a couple good examples, and here's some more. We're trading towards that lower end as far as the daily goes, usually some form of bounce when it's extended to the downside, trading at the extreme range. And also another unique situation and a setup is that when it's trading towards these lows, trading those yes shares, thinking that there's going to be some sort of bounce, you could also play the vice versa, that if I believe there could be some sort of bottom here because we're trading at the lower end of the Bollinger Band, then I don't believe it's going to go lower. So also trading the no shares on those lower prices because you would think there would be a bounce because we're at the extreme end of the Bollinger Band. These are also really good examples of thinking that if it does bounce, buying the no shares of it going below that price where it kind of opens up at, that's probably going to be a good opportunity as well because it's extended to the downside and we're anticipating a possible bounce. So there are a lot of ways to be creative when it comes to the daily close on the NASDAQ 100 and the S&P 500. Here were some examples of those today. It's all about being able to think outside the box a little bit, and I know the Bollinger Bands can definitely help with that. So that was the video. I appreciate you watching. If you have any questions, feel free to leave them in the comments below, and I'll see you in the next one.